Good morning. This is Vance, and this is Wednesday, March the 15th, 2017. These are the CL trades for today using the slow hand method of price action. March the 15th. Beware the Ides of March. Julius Caesar. This is supposedly the date in which he was killed. March the 15th. That's what the Ides of March are, right in the middle. Okay, just a little bit of Shakespeare for you. Anyhow, let's talk about yesterday briefly. Didn't do a video last night. Tell you what I saw. The point is, and I think I referred to this on Monday, I talked about the consolidation zone, pricing unwinding from last week because of the, likely because of the report, the DOE report, and the API report where it indicated this big 11 million barrel build. That was last Tuesday, a week ago yesterday. They had another bearish report, 8.6 million barrel build, and you see prices kind of dropped on Wednesday, kind of solidified on Thursday, a little bit further. I mean, when you look at the overall net decline on Friday, it wasn't that much. Tuesday, we had kind of a consolidation. It really, in the overnight, it reached a high that was higher than the previous day, and on Monday. And yesterday, Tuesday, it had this fairly steep decline. But the interesting thing about this decline was that this decline took place roughly an hour and a half before the open. About 7 o'clock, price declined down to here. Here's the open, right at 9 o'clock. And so we had this decline. It broke through the previous day's low, and that's been a low for some time, at 47.90. So it broke the $48 mark as far as crude oil was concerned. Went down slightly. There's a short right here. You could say it was a short, a second entry short. Now, these are pretty long bars. The general trend is down. It does break through this channel here, or this the top of these tops right down here. Not by much. Turns around and then rolls over and heads back down this direction. Now, the reason I looked at this trade, or have this trade, is that if you say that maybe this is the start of a new trend like this, maybe, and you could say that this was down in this direction. So as a result, this is really kind of a good, it breaks the channel, pulls back, and then to get in here for the long, but then fails up here is a second entry short right there. So I thought this was a little bit premature because of the size of the bars and because of the general trend being down. So I was looking more towards shorts. This one right here, it pulls back a little bit. Now, I took a short here at 38, but it didn't give me much room, and I took a small loss on this one because it turned around. And as it did give me another opportunity to get in, but I missed this one. So this is really an opportunity to get in right here. So if you look at it from this perspective, price is showing some weakness here. Now, it's kind of really sideways. You can see that there's two ways to look at it, I guess, more than anything else. The reason I was kind of reluctant for it is that this kind of looks like maybe support, and I was basing it off this area, that this might have just been a small overshoot. And so what I mean by overshoot, I'm just saying it was perhaps just an overshoot from if we have another channel in here that in this area here, from this area, that if this was support, this was just the overshoot pulls back, and I don't know how it's going to respond to here. So what you're doing is that you're playing this as maybe a tighter range and perhaps a breakout, or either a continuation of this channel here. If this is a channel like this, anyway, as it stood. It was a small loss in this one because I thought it was going to go to. I thought this was just kind of a turnaround pattern, a second entry short off of this one, and I felt that, and I actually had this like this, more like in this line, and I was basing it on the strength that I was looking at perhaps another measured move. At least get the 15 ticks, and it didn't quite get there. So anyway, that happens. I mean, it's not that does happen. Okay, so that's just keep that in mind. Pricing or trading is not 100% because you don't have this. I mean, what I had was this. So if I'm looking at this and I see this thing set up like this, gonna, with a strong bar like this, is just consolidation, and that we're gonna rotate back down. And it didn't transpire that way. So it did turn around. So this is kind of like a more of a turnaround pattern. So this is probably a better short, but that's only in hindsight. You don't see that. You just see, and this decline. I thought there was going to be more legs, considering that we had this big sell off right here. But then we have this rotation. We have this area, it consolidates it down a little bit lower. Opportunity to get in here. Now this is a long bar. The reason I would suggest that I was looking at getting in here is because this rapid pull down and this rapid rebound was very fast. This took just a few minutes. This is like 3 minutes. And so you think of the pricing kind of rotating, was reluctant, and then we had buyers and sellers really in balance, and this drop took about 3 minutes to take place, and then it rebounded within the next 2 or 3 minutes. So this whole thing was about 5 minutes, which is typically an indication, or generally can be an indication, that sellers are just like a final push, like maybe the death rattle. They're giving up. I mean, it shows extreme weakness. Now, I'm not saying that that's always the case, but certainly when you see that, and it was, but unfortunately, it broke through so quickly, pulls back, and then takes off, that there was really no an opportunity to get in, unless you were really, really determined and lay an order right down there. Now, not saying that I did, but I mean, that's a tough thing to do. That is really very tough because of if you recall, and I mean, I was watching this as it was developing. I was here, and to see this occur like this happened in a very short period of time. To be able to pull the trigger on this trade, that's a tough one. This is a tough one. Sometimes trades will give you time to think. Other trades don't. I mean, you have to be prepared to pull the trigger. It's like, how can I say this? It's like you have to be like looking at a target. I have friends that deer hunt. I don't. And in some cases, if you're bow hunting and you see a deer within range, it's not a long period of time, it's not a long range, they have to sit there with that bow pulled back and with all that tension on there, waiting for that animal to step out for a clear shot. And sometimes sometimes that doesn't happen. Now, that's kind of the same thing. But once you do get the shot, you have to be able to pull the trigger, and or release the string, I guess, or to allow the string to go. Now, think of all the tension that you've built up, that kinetic energy, and trying to move it and maintain your target despite the fact that you're under a tremendous amount of tension with what you've pulled back here. That's a difficult thing to do. And you can tire out. So you have to pick your spot. You have to be ready for it. You can't be too early, because then you get too tired, and if you're too late, obviously you miss it. So that's kind of the same. That's a pretty good analogy with regards to trading. I mean, the point is that you have to be prepared. You're looking for an entry. That's what you're always doing. You're always looking for an entry. And as Al Brooks says, you're looking for reversals. That's what he's doing all day, is looking for reversals on a very small time frame. But that's what he wants to do. He wants to buy, at the very best place to buy is when the very last seller sells. And then there's nothing but buyers ahead of you. That's really kind of what happened here. This is the very last seller sold this contract at this price. When the buyer stepped in, they stepped in with a fury. And you can see that this move took place very rapidly and actually retested where the much above the original opening price. Now, why did this take place? Now this gives you time to think. Is there a place to get in here? Not really. It kind of climbed really quickly, so there isn't really any, and these bars are pretty big. It kind of eliminates your 15-tick stop. Why do we have such a rapid rise and we could still have this back and forth motion? Well, my theory is, and this is my theory, is that because of the big decline from last week, the unwinding of price, which was roughly $5, it was at close to 50, like this right to here, 53.80. So last Monday it was 53.80, or Tuesday, and that was a week ago. And as of yesterday, on Monday morning, or pardon me, this morning, Tuesday morning, I say, on Tuesday morning, prices were a low of 47. So that was a fairly significant unwinding. Now, am I saying that you're going to be calling it right at the bottom? No. But what I did reason is that because Monday after Friday, and even Friday, Thursday and Friday, we didn't have that much of a fall off. Particularly, I mean, we had kind of a rotation. I mean, did have the low. It retested on Friday. On Monday, it didn't really go much further down. On Tuesday, remember, in 90 minutes before the open, we had this decline, but then it kind of found support really down at this level at 47.30, and from there, it came back, retested this area, and then kind of took off. And now, but at 4:30, when the API, and I felt that was going to be the case. They're waiting for the market is waiting for the new report. What's going to transpire? Was the build going to be? In fact, what happened at 4:30 yesterday is that the market was anticipating maybe a 3 million barrel build, and it turned out to be a 500,000 barrel drawdown. So they were out by 3.5 million barrels. And as of 4:30, price kind of spiked up. Took back, went to $48.90. So it went to almost $49. So we had a low of $47.09, and we went up to almost $2. And a lot of that took place probably within the last hour and a half of trading for the market being open, and when it was closed, when the announcement came out. So you can see it just kind of rotated its way back up. So what I'm saying is that I saw as 47.20, 47.30 is maybe the area to get in. But when days like this, when you have this, these testing of the bottoms like this, bottom feeding, you have to be very cautious. You have to try to limit in as low as possible, and you have to do so with the expectation that you're going to have a lot more scratch trades. You're going to probably, instead of having one or two winners, you might have to take a run at the market a couple of times, 2, maybe 3 times before you get a gainer, and you might have to take a loss. So you have to be prepared for that going in mentally, like that. Well, just like that hunter who's got that bow back, you can't hold the bow back. You can't put tension on the string for the entire time that you're trading from the regular trading hours. You have to pick your spots, and you have to do so with and if it takes too long to develop, you have to calmly. You don't let the arrow fly. You just don't do it. So hopefully it's not too abstract. The point is that I was looking for longs. That's basically what I was looking for. I was looking for a bottom. Now, I was yesterday as well, here, more so than the day before, but this decline was perhaps in anticipation of a bearish API report. Turned out it was somewhat bullish. Now, today, let's talk about today. That's for yesterday. Today, we're pretty a tight range. Here's the open. Look at it, gapped up at when price opened last night, and we've been trading within this real narrow range from 48.90 to 48.32. Now, a lot of that took place immediately, and right now we are at. It's been kind of slowly. We've got this slow trend upward. So if you kind of mark it off, it's like this. Here's the bottom of the trend, and let's call it like this. Now, it's a pretty slow, lots of back and forth, and that's because of the volume in the overnight and so forth. I mean, there's not a lot of volume in the overnight, but, you get these moves back and forth, and as a result, we're looking at what am I looking for? Well, today is the DOE report. It comes out at 10:30, and apart from 9 o'clock, which is 15 minutes from now, we might have a spike up. It might blast up a little bit higher. We'll have to see what the first half hour trading does. But the point is that before 10:30, before that report comes out, if that report, again, because it was a surprise in the API report, I think that's why prices are this higher zone currently. Now, if it's a slightly bullish report, in other words, a bigger surprise than what they anticipated from the market based on the API yesterday, prices might kind of rotate up significantly. If it's a bearish report, and it could very well be, prices might come back down and test what we had the low of yesterday. But either way, I still think that pricing is a little bit soft based on over the last week, and I think that it kind of overshot last week as far as the decline is concerned. But that's understandable as well. When the momentum is one way or the other, oftentimes the market will run further than anticipated. That the markets move and then the fundamentals catch up with it. That's usually what happens. So that's why After the market moves, you can explain it away with the API report. But while it's happening, you don't know that, because when the API report, as soon as it comes out, prices spike up, and now you can look at the report, you say, that's the reason why. But you don't know that until here, after the move's already taken place. The better way to anticipate, to limit in, is to try to think about the two options. Either it's going to be a bearish report or a bullish report, and where are you? And the expectation, if the market goes against what you think it's going to do, or what you believe the report is, you might wind up taking a loss on it. And you have to be okay with that, because the next time it won't be. You'll get it back. And that's pretty much it. So let's recap for today. Today it might very well be a tight range until the DOE report, and it's FOMC day as well. So that could also, when you have combination of the DOE report and the FOMC report, you might have more tightness or more narrowness of range during the trading hours. If it comes out, we might be able to buck the trend at 10:30 when the report does come out, but it's really to take a look at, to trade really at the fringes. I've been saying that for the last few days. You have to look at where the lows are and then trade at those areas, or where it appears to be support, and or sell at areas where you say it seems to be heavy resistance. Right now, the support and resistance, probably you should see just a few ticks up from the daily low and a few ticks down from the daily high. So it's kind of narrow. You can see that. And the rotation area is roughly here's 15 ticks. You can see that, eliminate the bar at the top and the bar at the bottom. Your signal bars. You can see that you only got like 15 ticks. So in order to give yourself a bit of a cushion, you're going to have to limit in. If I'm going long here, I'm going to have to lay down my buy order, my buy limit order down here, if my anticipation is for prices to go in this direction and to go higher. You got a micro double bottom here, and so if you buy above a stronger bar here, looking at your target to be prior to this high, based on where our previous support was, and your stop should be somewhere in the neighborhood of below, taking into consideration as much support as possible. That's it. This is 17 minutes long. Sorry about that. You won't be able to see it all before the 9 o'clock open, because it's only 10 minutes to. It's a 12 minutes to. So, it's not that critical today, being prime for the open, I believe. But because of the dual report day. But that's it for this morning. I'll try to get back on this afternoon, talk a little bit more about the Slow Hand Method course that's coming together. Emails are going out this week to individuals who have expressed interest. If you have interest, just let me know. You can send me an email. It's slowhandmethod@gmail.com. Send me an email, and if you want to get the details. This is Vance. Thanks for watching. Bye for now.